This is the morning brief from the Economic Times.
Biopharmaceutical company Biocon found itself making headlines this week. The company's arm, Biocon Biologics, announced the acquisition of biosimilar assets of American pharmaceutical company Viatris, following which the company's shares nosedived in the stock market. Biocon's shares fell nearly 12% on the NSE on Monday, right after the announcement, as investors didn't quite lap up the company's ambitious plans.
Doing this deal was to make sure that we have a commercial front end for developed markets. Thus far, Biocon was present in emerging markets. And as you know, we already had plans in place to start building a commercial engine for developed markets for our future pipeline of products. But this deal actually accelerates and leapfrogs us into the commercial space in developed markets, which is actually a very smart way of doing it.
That was Biocon's executive chairperson, Kiran Somvanshi, speaking about the rationale behind the deal. And while she termed it as being a smart way to expand and strengthen the company's portfolio and footprint, that didn't seem to resonate too much with investors. We have with us Biocon Biologics' Deputy CEO, Shreehas Tambe, and ET's Kiran Somvanshi, along with ET Prime's Vikas Dandekar, to take us through the contours of the deal, what went wrong, and how Biocon can recover from its share price setback. Today is Friday, the 4th of March. I'm your host, Dia Rekhi, and you're listening to Biocon's Biosimilar Blues on the Morning Brief. Now, if you're new to pharma parlance, let me quickly get you to understand what biosimilars are. Trust me, you'll thank me later, because if you were to play a drinking game for every time we use the word biosimilars in this episode, you'd definitely fail a breathalyzer test. Biosimilars are the new kids on the block in a sense. They're a biological product which is very similar to a biological drug, and there's no big difference in terms of safety, purity, and potency. Now, you may say that this sounds exactly like a generic drug, but no. Biosimilars are supposed to be the cheaper versions of biological entities, the way that generics are the cheaper versions of chemicals. But the difference between biosimilars and generics is that biosimilars are different in molecule size and structure, and also their complexity and cost of development, as well as the risks involved, are much higher than that of generics. Now that we have that out of the way, I hope you've grabbed your shot glasses, because we're going to dive right in and begin by asking Kiran what led up to this decision.
Biocon forayed into biosimilars over a decade ago, much before most Indian companies did. And they did it in a strategic partnership with Mylan. And Mylan was the front end and Biocon was a manufacturing partner. Now, in this kind of arrangement, they managed to get approvals for some of the key products in the developed markets. It did take longer than expected and it involved regulatory delays, but Biocon today has a portfolio of around 20 biosimilars, out of which 7 have been commercialized. So it has a fair set of successful products out there. Now, its biosimilars division, if you see, earned revenues of 981 crore, and that was 28% higher than a year ago level. And these are numbers for December quarter. And the core margin for the business was 38%. And this biosimilar division is also the biggest contributors for Biocon's top line growth. Today, biosimilars are considered to be an attractive growth area by many pharma companies. In fact, a recently published report on biosimilars by Cardinal Health expects 2022 to be the turning point in the US as these biosimilars expand into new therapeutic areas and reimbursement models also continue to evolve. So now you have more insurance coverage for these kind of drugs. So Biocon's move might just be at the right time.
Now that we have that background in place, let's get to the current deal. And that involves quite a few zeros that I find hard to keep up with. I mean, I'm having trouble processing the pharma jargon here. So I thought I'd make my life easier and get Kiran to take us through the fine print of the deal.
The deal value is $3.3 billion, which includes $2.3 billion in cash and a 12.9% equity stake in Biocon Biologics to Viatris. And Viatris also gets a board seat on Biocon Biologics. It is attractive for Viatris, obviously, and it seems to be quite sweet for Viatris in the near term. For Biocon, of course, it is getting the whole business. It's getting to add its revenues, its EBITDA. It's going to be acquiring the entire regulatory, supply chain, and commercialization capabilities in the developed markets.
In fact, Biocon's Kiran Mazumdar Shaw called this acquisition transformational. But I asked ET's Kiran whether she thought it really was, and here's what she had to say.
In many ways, this deal is transformational. It will provide Biocon the scale in its biosimilars business. Now, Viatris's global biosimilar business has an estimated revenue of $875 million. And these revenues are estimated to exceed $1.1 billion in CY or next year, 23. Now, when you look at this, Biocon is going to get all of it on its books. And along with this, Biocon will also get Viatris's global commercial infrastructure and rights in all its biosimilars assets. So it includes all the in-licensed drug portfolio, and it also includes an option to acquire the company's rights in biosimilar aflibercept. So that's an important molecule, and that is something Biocon would want to bring into its portfolio. And Biocon intends to roll out the IPO of Biocon Biologics in another 18 to 24 months. Now, this company is the subsidiary company which is getting into this acquisition. And Viatris is getting an equity stake of 12.9% in Biocon Biologics. That is currently valuing the Biocon Biologics business at $8 billion. This is higher than the valuation of $5 billion at which a subsidiary of Serum Institute picked up 15% stake in Biologics last year. So you can make out, like from a $5 billion valuation last year, this current deal is pushing up the valuation for this company at $8 billion. So this deal is transformational for Biocon in terms of scale as well as valuations for its subsidiary.
Biocon has lost nearly 6,000 crore of its market cap since the announcement of the deal, while the Viatris stock has dropped 30% during the same period. So the natural question is why this transformational deal failed to impress Dalal Street and spooked analysts as well. For that, I turn to Vikas.
It's important to understand how they will be funding this deal. So it's like $3.3 billion. It's a massive amount. In my view, the very fact that it will be financed $2 billion itself is going to be, it kind of feels like it's a very big amount. Secondly, the understanding has been that isn't it like the two companies have been developing the same products, and why is Biocon paying so much to get those same products? So if you really look at the potential, I think they will be achieving $1 billion in the next year, and then they have paid 3.3 billion. So if you really simply look at the valuation, it's just about 3 times of what they are paying. So the revenues are there. There is a very clear growth traction. And this is probably where the market may have felt that it's taking too much of a risk to get these products on board. So I think the play generally in a biosimilars business is on future potential of molecules which are in research. And one more thing, so typically in a biosimilars business, earlier we used to see Celltrion of Korea or Samsung Biologics had taken the initial start. Then we have seen the larger companies, Amgen, Biogen, Pfizer, they all started coming into this. So there is a little bit of a hesitation whether there will be enough opportunities for companies like Biocon to make a dent in the large markets like the US or Europe or Canada. So it was not received well in the initial few days.
You touched upon valuations. Could you give us an idea of what peers' valuations are like?
If you look at Celltrion of Korea, which has been right at the forefront of this biosimilars evolution, they have somewhere around 18 to $20 billion in valuation. Samsung Biologics, which also does a lot of manufacturing for other biosimilar companies, they have upwards of $40 billion in valuation. As compared to that, I think if I have read it correctly in one of the analyst reports, this deal is somewhere around $7 or $8 billion in valuation. So a lot of it actually depends on what kind of a pipeline do we have, how well placed are these companies in particular product segments, and what potential do they have going forward into the future. So in those situations, we can't make a like-to-like comparison, but this still appears to be not a very inflated valuation.
Along the same vein, Kiran also had an interesting nugget of information to share. She spoke about how such large debt is not looked upon favorably in the pharma space.
Most pharma companies are pretty low on debt equity and they're not very highly leveraged. So here then you have a company taking on debt. So that's generally not looked as a very good thing. So that was one reason why Street frowned upon. And other was valuation, of course. Like Biocon is also paying top dollar for this business. So a valuation of 16.5 times the estimated EBITDA of Viatris compared with Viatris's own enterprise value of 6.5 times its EBITDA. So you can see the difference that Biocon did pay, and justifiably so, probably because biosimilars is an attractive market.
Here's what Shreehas Tambe, Deputy CEO of Biocon Biologics, had to say on the possible reasons why the disconnect happened.
I think one of the things that is probably different than what we've done when you are doing a transformational deal of the kind that we are into, it's always possible that it requires a higher leverage than you're used to. And in this case, we've got a deal where we've actually risk balanced it with a total consideration of $3 billion being broken up into two components, which is part cash and part equity. And then we've got a component which is actually deferred, which allows us then to pay it over a period of time. We have balanced it, but I think from how an external stakeholder would look at it, clearly there could be a question that, there is a $2 billion cash component which needs to be serviced. And how are you planning to service that? And we've given clear responses that there is a commitment of $800 million in terms of equity. And we already have debt commitments in terms of $800 million. So we are well funded to complete this acquisition. And I think it's a matter of taking that message through and getting everyone to understand that even though the initial years as we close the acquisition, at the starting point, we might have overall a debt where the debt to EBITDA ratio may be closer to 4. With the kind of equity infusion we're looking at, we would be looking to bring this down towards 3. And with the larger EBITDA base that I just talked to you about previously, we would be pushing that down from 3 towards 2. So I think that should give the investors that confidence.
I also got Shreehas to take us through Biocon's outlook and to outline the significance of this deal. Listen in.
Purely from an acquisition perspective, from a financial aspect, it certainly strengthens our profile financially. And it allows us the ability to make continued investments in R&D. It allows us to expand our global scale, whether it is in manufacturing capacity and capability, and widens our geographical reach. But most importantly, if you just look at the kind of portfolio that it will provide us, it will be unique in the industry in terms of the products that we've already commercialized in the market. It is already one of the richest portfolios in the industry today, which is commercial. But it always also will further strengthen in terms of the options that we've got to also bring in another asset which is already first to file and probably also first to launch in the biosimilar Eylea or the aflibercept asset that we would be looking to evaluate in this period post signing. From a financial standpoint, the estimates that we've got for the Viatris's biosimilars business for calendar year 23, we believe will be generating a revenue of over $1.1 billion and a strong EBIT of $250 million, which then provides us the kind of impetus we want to become a world-leading player.
Here's an important piece of information that should be noted. Biocon Biologics is looking to hit the capital markets via an initial public offering or IPO in the next 18 to 24 months. Will this acquisition have a bearing on that? Let's get Vikas to weigh in on that.
This is something that will unfold over the next 2 years. There are some marquee investors, I think, including Goldman Sachs and True North, and even Serum Institute has invested in this Biocon Biologics. And so there is already a lot of expectations that are building when these companies have taken so much of a position in a future potential of a company. See, as I mentioned, it's a very challenging field to be in, and that's why you would probably have only seen Biocon doing so much work from the Indian pharma industry. There are others, of course, like Sun Pharma has taken small steps to make a foray into biosimilars, and so has Lupin, and so has Zydus Cadila. But right at the top of the heap is Biocon, because they actually started early, and it's a daunting task. Having identified something like this as a potential business, they will be watched very closely. To me, so far as Biocon Biologics business is concerned, biosimilars business is concerned, this is a huge territory to be in. A lot of variables will play a big role, like you have to have absolutely impeccable quality standards. You need to have a very competitive pipeline, because going forward, there will be like third or fourth generation of biosimilars. Like a very hit product is there of Merck, which is called Keytruda or pembrolizumab, which is about $25 billion. Now imagine if there is an opportunity of $25 billion, how many large companies will want to take part of that share? So it will be intensely competitive. And, early starters like Biocon will have a significant role to play.
To conclude, I asked all three of our guests what they foresee as hoops that Biocon will have to jump through in order to get past the skepticism surrounding this acquisition. Let's hear it from Shreehas first.
No, I don't see any concerns at all. They are overall in terms of how the investor community would view this, or in terms of when we would look to unlock value through an IPO, because it just makes a lot of sense when we've integrated this. One is when we've gone about doing this acquisition, it's been in a very risk-balanced way. That the debt leverage isn't in a stage where it's impossible to service. It's very comfortable. And we have a very strong EBITDA, which is coming through immediately accretive upon closing, so that we can service the debt very comfortably. It does not impact our plans towards the IPO at all.
Kiran did say that Biocon can derive some comfort in the fact that it gets transition services from Viatris. But she did say that this does not necessarily mean that integration will be smooth sailing.
Biocon will get transition services from Viatris. So it's not like, acquisition doesn't mean that, Viatris is saying bye-bye and is not going to be there with Biocon. So there is a transition service from Viatris that is coming in. It's for 2 years period, and it is primarily to ensure a seamless transition and continued services. It comes at a cost of $44 million per annum. So that should be a near-term comfort for Biocon. But in any cross-border transaction, in any cross-border deal, there is always these integration issues which will happen or which will come up that any company has to take care of. So it involves integrating the work culture and reporting the hierarchies, weeding out the duplications, because there'll be always two parallel setups there. So you'll have to make it one setup. You will have to kind of weed out the duplicated roles. You'll have to realign the staff in terms of their size, in terms of their remuneration, and you also have to work on increasing the staff productivity. And of course, if you have debt to service, you would also want increased earnings. So there'll be a push on earnings, there'll be push on productivity. So managing all of it in a new kind of a setup. Thankfully for Biocon, it's not a completely new setup because these are the same people they have partnered with for long. So that's a relief.
And finally, we got Vikas to draw up a list of challenges that Biocon could face, as well as what he thinks they should actively look at going forward.
So, number one will be the commercial landscape. This place will get very crowded, and only the big players will be able to make some kind of a lasting presence. Scale was important, and that's why probably this was very important for Biocon to do a deal, number one. Biosimilars is extremely complicated in terms of the manufacturing processes. Biocon will have to watch and take every step very carefully so far as its manufacturing and supply chain is concerned. Thirdly, it's a place for big pockets. So how Biocon actually manages to survive and grow in this vastly competitive field will have to be watched very carefully. And that probably will also need a lot of investments in talent acquisition, in building their capabilities, and how they actually do their pricing right. Plus, one of the things that I will have to mention is that the pricing situation in the US and Europe is being watched very carefully by the regulators. So these will be very important for a company like Biocon or any company which gets into biosimilars to watch out for. As the company progresses and becomes mature, it will have to keep looking at opportunities in doing their own novel biologics. Novel biologics are the same as, a large company launching its own innovator products. And so far, Indian companies have not been able to make much dent. There are on and off examples where a company actually did something really great and then it could not really take it to the last stages. So failures have been more because of the risks and just the complexities associated with research molecules. So in the longer sense, I would think that while biosimilars will provide the essential foundations for the growth of the company, they will have to start looking at essentially the next generation biologics. I think that will also reinforce the future of a large company like Biocon Biologics as it looks at listing in the next 2 years.
There's no denying that the Biocon Viatris acquisition certainly is one of the largest in the biopharmaceutical space in India, and it will be one that will be keenly watched. Kiran Mazumdar-Shaw certainly seems bullish on the prospects of the business and vouches for the near and long-term growth story that Biocon offers investors. But as of now, there's no running away from the fact that investors and analysts alike have given the deal a side eye. With Biocon's IPO set to take place in about 2 years, it'll be interesting to see whether this incident will be written off as a knee-jerk reaction or one that was justified. Make sure to stay tuned because we'll definitely be on top of this. Thank you, Shreehas, Vikas, and Kiran. I'm your host, Dia Rekhi, and you are listening to Biocon's Biosimilar Blues on the Morning Brief. Thank you and have a great weekend. If you enjoyed this episode, please make sure to share it on your social media. Producers Bhavya Dilip Kumar from ET and Swati Joshi from Awaaz. Sound editor Varun Kapahi from Awaaz. Executive producer Arijit Burman. All external clips used in this episode belong to their respective owners, credits mentioned in the description.